Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Thursday. I hope it finds you well out there. It's going to be another great day here in the Valley of the Sun. Kind of warming up. Going to be a nice weekend. Get out there and enjoy it. I know Jason can use some warmth today. The heater doesn't want to cooperate, but he's all bundled up. He's looking all cozy up there on the front range. Our toll-free number, 800-951-0592. The website at allamericangold.com. And we had GDP out today. It was way better than expected, and we were expecting a pretty good number to begin with. When the numbers came out, I thought, well, this is gonna end talk of rate cuts and probably drive down gold, and the exact opposite has happened, as maybe a little disbelief creeping into the numbers. That seems to be the pattern lately. A lot of numbers that people are like, that number, there's something that doesn't quite look right. But again, the big number in government, Jason, the amount of money being spent by the federal government, we're talking about adding over a half a point of GDP just on government, an increase in government spending alone, driving it in. Another big increase, healthcare costs. So spending on healthcare plus government spending, Jason, if you take out those two categories, all of a sudden, GDP is like 2%. And then inventories, normally fourth quarter inventories, it's Christmas, right? So the shelves empty out, right? So you third quarter inventories, stores add inventory, and then, the Christmas comes and the inventory goes down. At least in the number, they said inventories didn't go down at all. That added 1% to GDP, and then the other big add was trade, exports. We're shipping out a lot more. That one actually made sense to me. We're shipping out a lot more crude than we've had in the past, and orders seem to be slowing down, right? Retailers were saying, hey, orders are slowing down, so that added about 0.4, and then consumer spending picked up the rest of it. But yeah, 3.3% GDP, obviously down from 5% of the previous quarter, but I think the highest estimate was 2.5, and I thought 2 to 2.5 yesterday. The highest was 2.5, but nobody cared about any of those numbers. I just gave them all to you. Nobody cared. Inside of that, there was some inflation data, and that was a tick lower. How's that? A tick lower than the third quarter, and that's all anybody wanted to hear, Jason.
I just think back to when Barack Obama was president, and he couldn't get two. Every single quarter, one, and we're recovering. It's recovering. Well, now we got these big numbers today, the last two quarters, and it doesn't feel like we're doing well either. So it's GDP is starting to become a number that I don't think really reflects how the economy is working anymore. It's I think they've rigged their way around it, Joe, because you would think that America's doing great off the last two quarters, wouldn't you? Hey, this is good stuff.
Right. And everyone throw a party. You definitely wouldn't be talking about rate cuts and financial problems with the banks. By the way, we're going to update that. The Federal Reserve not liking the amount of money being borrowed through that facility. They've reaffirmed March 11th, the bailout facility, the bank bailout facility will close on March the 11th. Of course, that's the one that's been skyrocketing higher, $162 billion. Apparently, of course, this is how the real banking works. The Fed had set it up to where the banks that borrowed, not only would they overpay for their treasury notes or their mortgage-backed securities or whatever else it may be, not only did they overpay for those things, but they allowed for the banks to make money on the differential on the interest rate. In other words, the Fed was overpaying them on interest. I don't know how it all worked, but today they closed that loophole and said, okay, no more. You can borrow if you need to, but you can't borrow and make money at the same time. So I'm expecting that bailout facility program. Remember, we were talking about it. The rate they were going is going to be 250 billion. We're probably going to see that slow down now, Jason, because at least the Fed stopped giving banks free money. And again, it's a way to cover it up. Hey, you need money. Come borrow it. We're going to overpay, and we'll let you make some more money, so maybe you'll need less money later. They closed that loophole this morning.
Yeah, well, as you said, that it was spiking, right? They're closing it down in March, and it's spiking. So, and we know that the cash left in the reverse repo is coming to an end. So that's whatever reserves at the other banks that are a little more stable, that's coming to an end. So I guess they just want to close the spigot, I guess, right, Joe? And we'll see what happens then, right?
Turn it off. Let's see what happens. Patriot Radio News Hour. Joe and Jason will be back after the break. 800-951-0592. Joe and Jason on this Thursday. Quick look in at the market. The Dow's up. So I'm a little surprised again, with that huge GDP number, right? 3.3%. You would think the Dow would probably be down. The 10-year note would be spiking. It's the exact opposite. And again, like I said, a lot of, I don't call it sand in that GDP number, recreational. So healthcare spending, recreational vehicles. That's your RVs and I guess your ATVs. I remember Obama pulled that one a few times back in the day. And of course, if you ask any of the RV dealers, they'll tell you that that's not happening. But some interesting numbers inside of it. We'll see what happens with all the revisions. But it was all about that inflation data being a little weaker. Remember, tomorrow we'll get some more inflation numbers. But the Dow up 100. The S&P's up 23. The NASDAQ's up 100, which with news of Netflix yesterday. But one of the other big group, the group of 8, Tesla, saying things aren't looking so well in 2024 and reduced Tesla stock down 10%, warning about slowdown in sales of electric vehicles. The 10-year note is down to 4.13. Crude oil continuing to spike up another dollar here, $76. Brent crude at 81. Gold's higher. Gold's up 5. Silver's higher. Silver just below $23. And again, as we get closer to March, being diversified, there's a lot of wild cards. I mean, yesterday, the United States, let's see, we bombed Somalia. Remember, there were some Navy SEALs that died in an operation over there. I think it was over the weekend. We bombed Yemen. And we were bombing in Iraq. I don't know. Again, Jason, no war being declared, but we sure are dropping a lot of bombs. And again, news out, Rand Paul ranting about how all the Republicans that at least half or more of the Republicans, they don't care. They want to just spend a lot more money on war.
Well, how big is that military budget, right? If you got to spend and inflate your way so-called out of the situation, then the military is the best way to spend. You not going to spend it on Social Security. You're not going to purposely spend it on the interest on the debt, right? You're not going to purposely just sprout a bunch of Medicare and Medicaid recipients, but you can purposely pump the military budget up, and so that's I think their only play here to try to, like I said, inflate and spend their way into a new economy. I think that's the Fed's play. I think we got a lot of inflation coming, and they're just going to tell us it's okay, as they continue to make it harder to buy essential items for the average guy, Joe.
Yeah, well, and Israel today said bombing in Iran now is a legitimate target. This war creep, it's just another log of why you want to be diversified here. Don't forget our buddies over at Y Refi, up to 10.25% fixed rates of return, not correlated to Wall Street, not correlated to the Fed, doesn't care about government spending, doesn't care about debt, doesn't care about GDP or anything else. You'll know exactly what you're going to get every single month after month. You got to have a minimum of $50,000, but check them out. Invest, yrefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI-24. And Jason, whether it be what's going on in the Middle East as this thing continues to slowly expand, the GDP today talking about the over-influence now of how much money of the federal government is starting to spend, and then the Fed reiterating March 11th, they're shutting down the bank bailout facility program, and they got really worried. They got really worried about the amount of borrowing happening, and of course, it was set up this way. But now the banks had decided, you know what, hey, why risk our money? Why loan it out? Well, we could just go to the bank lending facility and get free money from the Federal Reserve. They ended that. We'll see what the numbers look like. If it's still jumping by billions and billions and billions of dollars every single week, we got a problem, right? What the Fed basically did today, Jason, we should see that facility really go down to really small, because when it first started, go back to, it started in March of last year, right? It started out at just under $100 billion, and it grew, but very small, 100 million, 200 million, 300 million a week. I mean, let's not kid ourselves. Still a ton of money, but not really. It wasn't until this year that all of a sudden the facility started exploding. Right? And as the 10-year note fell, apparently the banks got to make more and more and more money the lower the 10-year note was. So we'll see. Hopefully this thing goes back down. Otherwise, that'll signify that there's a bigger problem. Let's hope that isn't the case. I'm thinking the Fed feels confident that won't be the case. Otherwise, they wouldn't have said anything.
Yeah, well, and I don't. The interesting thing about the Fed is they the last couple of years they kind of sheepishly kind of tell you the truth. They when they say they're going to do something, they do it. So you kind of have to believe that, but when they're observing what's going on, that's kind of where you don't know if you can believe what the Fed's saying, because their observations, right. And they're always like, well, we'll see what the data says. We think this is what we're looking at, but we're going to watch the data as it goes. But when they say we're going to do something, they actually do that. And so you kind of got to play the combination of, do you believe with their observations versus what are they going to do?
And then we, by all accounts, are expecting the Federal Reserve to, at the next meeting, to talk about the winding down of quantitative tightening. So the bank lending facility coming to an end. We think we're going to hear about the winding down of quantitative tightening. Now the only thing will be, Jason, what about rate cuts? when are they coming? And right now the data is saying they're not coming. I mean, 3.38%. I mean, whether you believe the data or not, it's still 3.3. Jobless claims. Okay, now jobless claims, they got worse. But last week's number was incredible. This one, 214,000. That's still a great number. But any other period of time, 214,000 first-time jobless claims would be a really good number. Continuing claims, okay, it did shoot up, but again, off of a low number, and we just haven't seen it, have we? We haven't seen the real big factor, which is jobs, saying that the Fed should be cutting rates.
And I think that continuing claims is going to be the more honest number there, Joe, because like I said, you can't. I've said it. Every time you bring this number up, I say, well, you can't file a jobless claim if you lose one of your three jobs. So the number is crazy, because in the years 2021, 2022, when employers just couldn't find employees, it made employers not want to fire people. I think in 2023, when business was going down, things were getting slow. They're getting slower this year. The businesses aren't so fast to liquidate their employment, but by cutting hours or hey, I got a part-timer that's got other part-time jobs, that's easy to do. But continuing jobless claims, that means people that are filing the jobless claims, which we get that number today, that's the one, Joe. It's like, hey, not only did I file the jobless claim, but I'm not getting anything to replace it. So that number I can see that number gaining steam before the jobless claims do, Joe, for sure.
Yeah, and we'll have to watch it again. It's something where we have a record number of Americans working multiple jobs. I mean, that's just kind of, how this economy has been going really since the financial crisis. Microsoft today saying they're laying off 1,900. We've been seeing, a good number of companies talking about slowdowns, layoffs. Ford with their electrical vehicles, right? Hey, we're gonna cut back. We're gonna lay some people off. We're gonna move some people. And then Tesla now coming out and saying, hey, things are slowing down already. And I mean, 2024 is just starting. Here's something interesting. I saw this. And I'm going to have to find out. I'm going to ask some of my buddies, but apparently the electric vehicles and your tires don't go together. According to reports, people are having to replace the tires on their electric cars as early as 7,000 to 10,000 miles. I mean, normally, even, I don't want to say a crappy tire, but, most tires you get, 40, 50,000 miles on a set of tires. But according to the data, people are getting as little as 7,000 miles before having to replace the tires. Listen, the tires aren't cheap anymore. I mean, guys, remember you could buy a tire for like $49? That's gone. I mean, cheap tires now are a couple $100, and those are cheap ones. You can easily spend well over $1,000 on a set of tires, and I'm not talking about the high-end tire, just kind of the middle of the road. And according to the tire companies themselves, Goodyear is admitting that, yes, for whatever reason, tire wear is 50% faster on the electric vehicles than they are on the gas vehicles. And Jason, just another one of these factors. I have no idea why. I mean, people are speculating that maybe the way the electric vehicle works, for some reason, you don't get good tire wear on these things.
Yeah, that's interesting. The first thing I think of, because it's always friction and heat, so are their tires getting hotter for some reason? I don't know how the electric cars are made, but if you have more heat, then the tires will wear off faster. The tires get hot, and then you drive on the road, and it just wears them down. That's interesting. It's just keep on finding reasons why you shouldn't get one of those cars right away, and until they're, how long have we had solar? We've had solar panels for years and years and years, even decades. But it hasn't been until recently that it's even considerable now. So I think with electric cars, how long has the Toyota Prius been around? It's just not long enough. Maybe I've never heard of that. I'll have to find the Prius owner.
I never had seen that. I thought that was nuts, and I'm like, okay, right? Okay, some guy, I don't know, driving his car like an idiot, right? Something like that. I didn't report on it until Goodyear came out and said, and they're admitting to 50%, right? Okay, so 40,000 miles is now 20,000 miles, but this report, some is less, 7 to 10,000. That's incredible, and that's a huge cost when factoring in. And of course, it's supposed to be greener and all that. Well, they're if you got to buy a brand new set of tires every single year, and again, I guess with an electric vehicle you can keep it under 10,000 miles. But yeah, I'll find out. I'm going to ask my buddies. I'll see if I can get any confirmation on that. It is kind of interesting. Yeah, crazy. We'll be back after. 800-951-0592. That's one great thing about gold. It doesn't wear out, right? No matter what you do, gold is so durable, right? It doesn't degrade in the elements. You find these shipwrecks, right? It's been buried in the bottom of the ocean for 200 years, and yet you know what? You scrape off the crud and all that, and there it is, right? It completely unharmed, doesn't wear out. It's kind of amazing. All the gold ever mined in the world, get it all off the ocean, right? All the shipwrecks, all the gold in all the vaults in all of the world, right? Take it all out of Fort Knox and West Point and go to the COMEX, go to the London Exchange, go to Shanghai. You go to India and take every piece of jewelry in all of India, all your wedding rings. You take it all the artwork. Take it out of the teeth of all the dead people because they don't use gold fillings anymore. And you take a basketball court. Just a basketball, the Suns. Take the Phoenix Suns basketball court. It wouldn't even be 100 feet high. That's all there is. I know it sounds, you think about Gold Rush, Parker Stobble, and they dump out all this gold. I mean, it's not nearly as much as people think, which is why it was easy, right, for the central bank to recall the gold in 1933 because they knew they could store it, right? Where people don't realize it back then. They actually wrote a law to take the silver as well. They were going to take both. And then somebody figured out, hey, wait a minute, right? Silver, that's a much different animal. You would have to take, I always used to say you'd have to take the state of Rhode Island, level the whole thing, and make it, build a warehouse, and who knows, 100, 200 stories tall to store it all, right? I mean, it wasn't practical. And this is why, when we build portfolios, because people always ask all the time, well, how much gold should I have? How much silver should I have? And Jason, I will always say, listen, an ounce of gold for every year you've been alive. That's a good goal to achieve. You got you, your wife, your kids. You want to have an ounce of gold every year you've been alive. If you're looking at how much silver, and people love silver. Obviously, it's less expensive. It's more spendable, right? Obviously, gold, over $2,000 an ounce, right? So and you want to have something, hey, if all hell breaks loose, which nobody wants, but if it did happen, right, you want to have some silver on hand to trade with, right? Because let's face it, when all hell breaks loose, right, law and order kind of breaks down, and you're going to have to deal with some unsavory people, right? So you always want to have some silver on hand. But the one thing I always tell everybody, $1 million worth of gold. I used to tell people $1 million worth of gold would fit in a shoebox. That's what I used to tell people. That's not true anymore. $1 million worth of gold now will fit in your wife's purse with all her other crap in it. No offense, ladies. My wife, I love the fact that she's got all that stuff in there, right? Whatever I seem to need, my wife's got it in her purse. It's getting smaller and smaller, isn't it, Jason? As the price of gold continues to rise, right? $1 million worth of gold fits in a lot smaller place. And you think about, $1 million worth of silver, man, you're going to need a really big vault still to store it all.
Yeah, silver's definitely bulkier. And the thing is it's not because gold is becoming more valuable. It's because the dollar is worth less and less. The gold and the silver store of savings. This really is savings. I don't use the word investment with gold and silver that much because I think it leads people to believe that they're going to do something with their gold and silver that's not going to happen. There's a reason Wall Street doesn't buy tons of gold. It's because they can't manipulate it and work it and profit from it in huge ways. It's very, it's slow, it's cumbersome, it's when you're saving money, when you're building your 401k, if that's what you're into, it takes years and years and years and years and years and years before you have something there that's worthwhile. Gold is, I think, a little faster, a little more honest, better. No penalties, taxes, fees as much as the 401k, and it's great. It just does its job, and you don't If you're buying gold and it gets boring, I mean, even Joe and I were talking this morning about which product to sell because there's not a whole lot of different things that we sell. I mean, there's a lot of ways to buy and sell gold and silver, but it's supposed to be boring. It's not supposed to be exciting because if it was exciting, that's what gambling is. Why do you think everyone at the casinos are having so much fun? Well, because you have a chance of losing it all, right? Gold is not going to lose it all. As long as you're holding it. It doesn't lose. You can't lose it all. There's no gambling. It's saving. So, yeah, I like when you talk about how all you need, $500 for an ounce of gold, $1,000 for an ounce of gold, $1,500 for an ounce of gold, $2,000 for an ounce of gold. And it's like, oh my gosh, my gold is getting so valuable. No, it's still 1 ounce of gold. It's been that way for a long time, right, Joe? And that's why a sophisticated or somebody who understands gold, that's why you keep stacking it up. And gold. Joe made the point. Gold is it's just more easily storable. You can really put it. It's a store of value. Silver is too, but yeah, you gotta be a little more smart when it comes to silver storage. It takes up a lot more space. For sure.
Yeah, I mean, $1 million of silver, just to give you an idea, about 3,000 pounds, right? So you're gonna need a pretty heavy duty forklift. To do it with, you're talking about, almost 68 cases, green monster boxes. Each one of those things weighs over 42 pounds. But I just did some quick math. When I first started, go back over 20 years ago, $1 million, I said, would fit in a shoebox. And gold, when you buy a roll of silver eagles, there's 20 in a roll. Well, gold, $20 gold pieces. We've got a plastic tube that we put them in. When you buy, 20 of them at a time. You used to have 167 of those plastic tubes for $1 million. Today, you get it done in just 22. Just tells you how portable $1 million worth of gold really is. Patriot Radio News Hour. We'll be back. 800-951-0592. Joe and Jason here on this Thursday. GDP bigger than expected, 3.3%, led by soaring cost of health care and government spending and recreational vehicles. That's kind of and no reduction in inventory, kind of the big four there that was pretty much most of GDP growth. Shares of Humana, the big insurer, just getting hammered right now as they full year guidance for 2024, half of what Wall Street was expecting. Humana saying that healthcare costs, Jason, get ready, they're going to have to go a lot higher. They said that everything's just costing more. The cost of providing healthcare is just overwhelming them, and they expect this to continue throughout 2024 as well. So again, this. And Jason has said it before. Inflation, the way they count it, they're going to tell you it's under control. It isn't, and it's going to have an effect. That's why we keep telling you, get this gold put away today. $5 liberties. So we did $5 Indians last week. We've done $10 liberties, $20 liberties. These are the $5 liberties. The quarter ounce, a little more, this is, when you're bartering here, this may be something you use, for a generator, or maybe, you're gonna, buy, some type of engine or something like that. This little bigger type purchases for, in case you need to have it. $5 liberties, 1 through 19, 575, 20 or more at 570 at 800 951 0592. So Jason, news out of Humana, 50% reduction in healthcare premiums. I mean, they skyrocketed. And Humana is saying, hey, that's not going to be enough. Get ready for more increases in 2024.
Yeah, insurance as a whole, I think, is just going to keep more expensive. We talked about this a little bit yesterday. I think the insurance companies are seeing some dark clouds for sure, Joe. I talked briefly about my homeowner's insurance. I made that phone call, figured out that the company that's representing me just don't want to be in Colorado anymore. So they're just throwing the rates as sky high as they can. It's like, well, we'll collect it from you, but we're figuring out that this is probably going to be something you don't want to do, and you'll find somebody else. So why wouldn't you want to expand? Anytime something contracts, there's a problem. Why would an insurance company not want to be in Colorado? Now, I get there's laws and things of that nature, but that shows problems. If you ever hear McDonald's doesn't want to be in Colorado, that's not something wrong with Colorado. That's something wrong with McDonald's, right, Joe? That's McDonald's, Walmart. They're not going anywhere. They're growing at all costs. So insurance companies, I think, are preparing for something, Joe. It's a very take heed, I guess.
Yeah, it makes sense, right? People could, possibly understand. Okay, Florida. Okay, well, Florida gets hit with hurricanes, right? California, they don't really get hit with hurricanes and stuff, but it's California, right? I mean, they're nuts there to begin with, right? I mean, people can kind of understand that, but this is everywhere. I don't care if it's homeowners insurance, car insurance, health insurance, right? It is eating up and remember now, health insurance, now for the guy that, hey, when you're working for the man, and maybe you're working for the big company, yeah, your rates are going up, but you're probably saying, well, it's not that bad. Yeah, okay, it went up, but it was like $50, right? Okay, yeah, it sucks, but it wasn't too bad. But let's face it, all of us guys that are small business owners out there, it's crazy the increases. I mean, it's not uncommon to be all of a sudden you go and at the end of the year and they're telling you, hey, it's another $300-400 a month more. Car insurance. I mean, car insurance, you're talking about 20, 30, some like 40% increases on car insurance. Right? Homeowners insurance, like Jason, homeowners insurance, I mean, that used to be pretty reasonable. Huge increases in homeowners insurance. And these are things, right, Jason, that don't go away. Right? These are, hey, that's just extra money. At the end of the day, you know, there's people just in insurance cost alone are paying an extra $300, $400, $500, $600 a month. You know, that adds up real fast.
And think about what homeowners insurance is telling you, too, because, you know, replacement, you know, your house burns down, you know, replacement is a certain amount, right? But at the time that the house burns down, to the end of getting the house rebuilt, prices could be going up during that course. I think insurance companies are probably losing because they got replacement value and they're like, okay, this house should cost $700,000 to rebuild or whatever. And then they get, you know, whatever many months it takes to get the thing done. It's like, wait a minute, how come this is $850,000? What happens? Like, well, the builders, you know, the lumber here and this cost and doorknobs and nails and everything just went up during the course of it. And I think that's how fast things are going up. You know, insurance companies have to price in, hey, how long is it going to take to get this house built? How much more expensive from the beginning to the end is it going to cost, Joe?
Yeah, and especially when they do those types of increases and then announce, oh, by the way, we're slashing our earnings estimates in half for 2024. That's not a good sign. Patriot Radio News Hour, final segment when we 800-951-0592. Joe and Jason, Patriot Radio News Hour, wrapping up this Thursday. $5 gold liberties, the old ones, 1866 to 1907. You know why we like them? You can buy them, sell them, trade them. You don't have to worry about giving out your Social Security numbers and 1099s and any of that stuff. It's the most private way to own gold. Great way to hand down wealth as well. $5 U.S. liberties, quarter ounce, 1 through 19, $575. 20 or more at $570 at 800-951-0592. That's $11,400 if you buy 20 of them. And Jason, as we sit here and we start looking at what's going on, when we saw this great GDP number, really what you want is you want to see that it's mostly driven by the consumer, right? That's what you want to see. Instead, what we saw was a number driven by healthcare costs, government spending, and the fact that businesses had more inventory than people were expecting. I think that's probably why Wall Street looked at that number and said, not really not as good as it really looks. And again, the one thing, though, I think that's going to be consistent, the government's not stopped spending. That's the one thing that I think that a lot of people that are hoping that this inflation problem goes away, the government just seems insistent on spending more and more money. There's just no end to it.
Yeah, the spending there's a lot of pressure there. So we'll see how things progress the next few weeks and months, because I don't see how they could spend less in their situation they're in, especially when the interest on the debt is a monster that's going to keep growing faster. So they have to spend more. And I think I think inflation is their way out. They're going to try to inflate their way out of this thing.
We had to sell $61 billion yesterday of 5-year notes. Another disaster. One of the worst tales ever, matching the record high from 2021. And of course, all the records now seemingly been in the last 3 years here. The bid to cover really ugly, down to 2.3, well below average. The last month was at 2.5. The internals were even worse. Dealers were left holding over 20% of this auction. So again, a clear sign that this reverse repo is going to be out of money come the end of March. In these ugly auctions like this, Jason, I think this is something now we can say this is definitely the trend now. This isn't, oh, well, it's just an aberration. This is a one-off. No, this is now the new normal, and it's going to get very interesting what that's going to look like when the reverse repo's out of money.
Yeah, I'd like to know who's buying any treasuries right now, right? Who's buying any treasuries right now? I guess maybe there's some out there that actually think the rates are going to go down and stay down, so I guess this is your chance to buy high, but I don't know how many are falling into that trap right now, Joe. I don't know.
Not enough. 800-951-0592. Jason and I, we're coming right back with the Half Empty Cup.